I really like dividend stocks, and I love the dividend investing community. Like-minded people that love to invest in companies that pay a dividend. But even in this awesome community, there is sometimes disagreements. There's definitely a difference of opinion when it comes to investing in high-yield dividend stocks versus dividend growth stocks. One question though that seems to divide many dividend investors is, should you or should you not invest in sin stocks? More specifically, tobacco stocks. Some people choose not to invest in these stocks out of principle, saying that, well, tobacco is not good for people to consume, and therefore I'm not going to invest in these companies. Others take a more pragmatic approach. The point of this video is not to tell you whether you're right or wrong for investing or not investing in tobacco stocks, but to take an honest look at the 4 main tobacco stocks out there. We'll take a look at their current dividend metrics, which of these dividend stocks appears to be the safest of them all, which of them has the best prospects for growth in the dividend in the future, which one may be the best one to own and also write call options on to generate additional income. And as part of this process, I will be transparent and show you exactly what my ownership is in each of these 4 companies. Alright guys, so here are the 4 different tobacco stocks we're going to take a look at. British American Tobacco, BTI, Altria Group, MO, Universal Corporation, UVV, and Philip Morris International, PM. All of these companies are in the tobacco industry, but they don't all do the same type of business. You'll notice 2 of these dividend stocks have been paying dividends consecutively for many more years than the other. Both Altria Group and Universal Corporation have been paying dividends for over 50 years, which makes them a dividend champion and ultimately a dividend king. Then we've got Philip Morris International, which is a dividend contender with 13 years of consecutive payments. And then finally, bringing up the rear, British American Tobacco, BTI, with 6 consecutive years of dividend payments. Now just for awareness, British American Tobacco has been paying dividends for longer than 6 years, but they did have a dividend cut here back in 2017 going into 2018 when they went from making semi-annual dividend payments to quarterly payments. So we've only got 6 consecutive years of raising the dividend every single year. I'm not going to necessarily deep dive this in any specific company. Just know that 3 of the 4 companies, not Universal, the other 3 have taken intentional efforts, some more than others, to diversify their brands and their products to be more health conscious, or at least that's the attempt, is to make their products more health conscious. Now with British American Tobacco and really ultimately Philip Morris International and Altria Group, these products are primarily sold in the normal way we think of cigarettes, right? In liquor stores, in regular grocery stores, etc. Whereas Universal Tobacco, we'll talk about, is a little bit different business model. Now you should know that Philip Morris and Altria used to be one and the same company. There was a split 10 years ago, and Altria retained the USA brand, Philip Morris USA brand, and Philip Morris International is a wholly separate company. Now when we look at Philip Morris International, we have to know that this is one and the same ultimately as Marlboro. The number one, Marlboro. I can't say it, Marlboro. Is that how you say it? Marlboro. That's a hard word to say. Marlboro is one of the best known trademarks, number 1 cigarette brand since 1972. That is the Philip Morris's primary brand, and it makes up 37% of the total cigarette shipment volume. Now, Universal is a wholly separate type of company. They conduct business in more than 30 countries on 5 continents and employ more than 20,000 workers. Our business includes procuring, financing, processing, packing, storing, and shipping tobacco and other agri-products. And they're the world's leading global leaf tobacco supplier. And interestingly enough, they recently started a sweet potato processing business and intend to expand into other agricultural products processing. Now, one thing that's interesting is that all of these companies, with excepting Universal Corporation, these 3 other companies, they talk about wanting to diversify their business into non-smoking products, or these may be healthier options. However, if you look at a lot of these annual reports, and we look at net revenue by product category, you'll see that the combustible products, aka cigarettes, and other types of products like that, make up a significant portion of the revenue compared to some of their reduced risk products. 22.19 versus 9.11 here for net revenues for, this is Philip Morris International. This is Universal Corporation. Tobacco sales make up, like I said here, a significant portion of the revenue. Tobacco sales make up $1.7 billion here compared to ingredient sales, processing revenue, and other sales and revenue. This is Altria Group, same thing. We've got smokable products, oral tobacco, wine, and all other. And this is in millions. So we've got 45 million, 494 million, 2.6 billion with oral tobacco, which is, respectable. And then you've got $22 billion in smokable products. So we can talk all we want about how we would potentially diversify the product, but ultimately they're not anywhere close to doing that. So we've got here, like I said, 6 years, 52 years, 51 years, and 13 years. And you'll notice that there's a little bit of variance in the price per share, but this is a little bit aged. This is based on March 7th. Let's take a look at dividend growth rates here. We do see some pretty good growth here with British American Tobacco on the 1 and 3 and 5 year growth rates. Same thing, we've got lots of stability with Altria Group. We have seen a decline over the most recent 1 year, but again, these are a little bit affected by COVID, so we want to hold those loosely and look more at the 3, 5, and 10 year growth rates. I imagine these 1 year growth rates might bounce back here a little bit for these larger, more established companies. Universal, for example, only at 1.3%, but historically much higher than that. I bet you that one will bounce back. And then Philip Morris here, pretty stable around 3.4, 3.5%. Dividend yield wise, the top dividend yield is actually with British American Tobacco at 7.15%, followed by Altria Group at 6.73%, Universal Corporation at 5.44%, and Philip Morris International at 5.01%. Next thing I want to talk about is payout ratio. Remember, we talk about payout ratio based on free cash flow as opposed to payout ratio based on net income. This is because dividends are paid with cash. We want to talk about cash flow. All of them have pretty good payout ratios. The lowest, the best one here is ironically with the most established company, Universal Corporation. Payout ratio here is only 44%, which is great. British American Tobacco is at 75%. A little bit high considering they only have that 6-year dividend history, but still below my normal threshold. These are in the yellow at 82 and 84, but for long-standing companies, when we think of Altria and we think of Universal, we are okay with this payout ratio being a little bit more elevated as long as they're a consistent dividend payer, although we would still be concerned if this was popping above 90, 95%. With Philip Morris International, I would have hoped this would have been a little bit lower, but it's a little bit high for me at 84% with only 13 years of dividend payments. You can see the trending here with free cash flow per share. Historically, we see very stable free cash flow with British American Tobacco across right here. Same thing with Altria Group, 2.45, 432, 406, 439. We went negative here with Universal Corporation in 2019 and 2018, but much higher now in 2020 and 2021. And Philip Morris also very stable with their free cash flow. So from a dividend metric standpoint, I really like Altria Group and Universal Corporation for their dividend stability. These are companies I think are not going to have any problem continuing to pay an increasing dividend every single year. From a dividend growth rate perspective, I really like British American Tobacco, though it is only a dividend challenger with only 6 consecutive years of dividend payments. One thing that's interesting, you take a look at the price history of the stock. Now this doesn't incorporate dividends, so it's not the complete story, but it's still interesting to look at. This is British American Tobacco. We're looking at their price history. I'm looking at the 5-year history for each of these dividend stocks. For British American Tobacco, it's got a decline over the past 5 years, from 2017 down to 2022, from $68 per share down to $43 per share. We look at the same thing with Altria, same idea here, 5-year history. Up right here around 71 down to 52. With Universal Corporation, we were up here at 73 down to 57. And then same thing with Philip Morris International. We're at 112 here back in 2017, and we're down to 92. Part of this is just timing too. There was a drop in 2018 that occurred, then we got the COVID drop. So this doesn't tell the whole story because it doesn't factor in dividend payments. So somebody reinvesting dividends during this time frame would have a much better performance from this investment. One thing I wanted to look at here when looking at these 4 different companies was to have some awareness over what would make the most sense if we were looking to sell covered calls, because as you guys know, this is one of those things that I've been taking a closer look at it and I'm implementing in my dividend portfolio is to really focus on covered call strategies. So I took a look at each one of these. Now this is after hours, so it might not fully reflect what's available, but one thing I noticed right away in looking at all of these companies, but if you want to sell covered calls, you're not going to want to invest in both Universal Corporation as well as right here, British American Tobacco. Both of them do not have a lot of volume in their options trading. We've got monthly options here potentially with British American Tobacco as well as Universal Corporation. And looking at the option premium too, very little option premium available. Now that's different though for Philip Morris International and for Altria Group. Looking here at Philip Morris International, you've got a lot more expirations available here, April 29th, May 6th, May 20, June. This is with Philip Morris International, and the option premium is pretty good here. 32 days out, I went ahead and went out to 30 days. Pretty good option premium, out of the money here, 183 to 242. That is a pretty wide spread though, I'll admit, between the bid and the ask, but still pretty good option premium available. Same thing here with Altria Group. Looking at 32 days out here, April 29th expiration. The share price is half that of Philip Morris, so make sure you factor that into the option premium here. A lot of good option premium, and the spreads here are much lower with Altria Group. So for that perspective, if you're looking to potentially invest in a company and sell covered calls, you're going to want to look at Altria Group as well as Philip Morris International. So as you can see here, I have a position already in Altria Group. I have, 100 shares, 100.344 shares of Altria Group. I don't have a call option sold yet on Altria Group, but I am going to be doing that here, moving on that really soon. For me, guys, I just have a very pragmatic approach, and some of you guys might not like that. Ultimately, when it comes to investing in sin stocks and tobacco, I don't smoke myself, and I have a very pragmatic approach, and maybe some of you guys don't like that. It is what it is. I don't have any problem really investing in Altria Group, but if you guys don't want to, if you don't want to touch sin stocks or tobacco products, that's fine. There's so many different investments out there that you can utilize, and a lot of it depends on what your strategy is when it comes to investing. If you're looking at high yield dividend stocks here, all four of these options are not bad at all. All of them have a yield over 5%. Dividend growth rate is pretty good for most of them over the 1, 3, 5, and 10-year growth rates. Make sure to leave your 2 cents down in the comments below. Let me know which of these investments you own in your portfolio, which ones you're going to take a second look at. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.